Katie Bullard might be the ultimate scale-up operator. She helped take DiscoverOrg from 30 million to 300 million in revenue, led A Cloud Guru through its acquisition by Pluralsight, and served as president of Red Canary through its successful exit to Zscaler. And in today's conversation, she shares some of the biggest mistakes senior executives are making as they navigate an AI-first world.
Too many companies, I would say, are focusing on and not on.
Katie now sits on the boards of top growth stage software companies, so she has a perfect view of what's working and what's a dead end.
The classic operator of a $100 million business actually will not be particularly successful in a $100 million business today that is redefining itself.
We also unpack the massive shift in C-suite expectations, how to better align your CRO and product leaders, and what to prioritize as you build a team that's ready to win in 2027.
We're testing more for versus.
Welcome to Topline.
Hello. Welcome to Topline. I'm joined here by my co-host Asad Zaman. And well, sadly, Sam Jacobs is not here. He's flying somewhere. He always sends it. Asad, Sam just sends us a text that he's like, oh, hey, I can't make it tomorrow. And then here we are. We're like, okay, we'll take it. We got
charging
this.
Sam for every episode he misses.
Yeah, that's okay. Because we're also joined by Katie Bullard. Katie, I'll give you a little bit of background, but Katie and I know each other well. So Katie was the president of DiscoverOrg. She helped take that business from 30 million to 300 million through the acquisitions of RainKing and ZoomInfo. You all probably heard about the DiscoverOrg and ZoomInfo acquisitions in the go-to-market world. That was very centered around Katie's orbit. So she'll talk a little bit about that and the rebrand ahead of the IPO. She was president of a cloud guru, ACG. I actually know that company because Katie and I shared an office, not at the same time, but when I was in Austin, Trendkite, and then a cloud guru. Katie, did you work out of that office?
I did. I could feel your presence.
Do you remember where your office was?
I only worked there for 6 weeks because guess when I joined? January 2020.
Oh.
And COVID hit. And so it was 6 weeks of feeling your presence in that office, AJ.
Well, I was just wondering where in the office you switched, because the kitchen of that office was the centerpiece of it. Like that was the reason that we got that office. I don't know why if ACG had the same feelings.
The kitchen was spectacular. Yeah. We just
had
a
fun note on that because we could talk about
open space.
Open space, lovely open space. Is that we both have a mutual friend that worked for us, Meg Garrett. Meg has a distinction of working. I think she worked for 4 companies, one after another, in that office.
The same office,
by the way.
Yeah.
So Meg, if you're listening, there's
office.
What up, Meg?
Same office,
but the actual office.
The
yeah,
actual
it's in
office,
Brazos.
not only just the building, the actual unit, the suite.
The actual office. And 2 of them, she had the same desk, actually, which is crazy.
Huh?
Yeah. So
we'd like to think Austin is a big town, but I guess it's really still a small town.
It was really back at that time. There were just 4 companies, and I'm going to say Trendkite was one of them that started it all.
Villages and don't work in the same office twice. That's so crazy.
So Katie was with ACG through the acquisition of Pluralsight. She was then the interim CEO of Mural, an operating partner and managing director at Insight Partners. And that's actually where I got to know Katie really well. She was a board observer and worked with her every day. It was fantastic. She advised CodaPath and helped us really revitalize the product, our product strategy, the right process and people. It was awesome. And most recently, she was the president of Red Canary, which we'll talk a little bit about that today. That had a successful acquisition to Zscaler, And today she sits on the board of growth stage software companies, including a friend of mine, Zach's company, which I actually think I made that introduction to Order.
You did. We actually just did a luncheon. We did a stage 2 capital luncheon here in Austin last week. And we actually told that story. Zach came down for it. And we told you became the star of that as well. So
just working my way into all conversations. Katie, welcome to Topline.
I'm glad to be here. Thanks, guys.
The stock I've made the 3rd most amount of money on is Zscaler.
Really?
I am a big fan. Yeah. I bought it at all the right times. I've been in and out a few times, but I made a lot of money on it. Big fan.
That was my only cybersecurity stint, the 2 years at Red Canary and then Zscaler. That is a fascinating industry.
Was Dolly the president there when you were there? The guy that now is the COO at Wiz, I think.
Yeah, no, he was not. No. We just sold, I want to say it was August of last year.
Oh,
And
yeah,
then I
so
stayed 6 months. Yeah. And literally just left February 1st. So it's
he
all still
built like
very
one
recent.
of the most legendary go-to-market teams at Zscaler. I think he took most of that team with him too, Wiz. But
Incredible
for a period
team.
of time, it was the best go-to-market team in all of tech. Like
Wow.
it had that thing.
So it was an incredible team. Yeah. It's a great company.
Katie, if you don't count Zoom Info, what's the longest, I don't want to say stint because it's probably not the word, post acquisition, what's the longest time that you've remained at a company after?
So MetroTech was the first business I was at, which was an Austin-based legal tech company. We sold from Vista to TA. I stayed for 6 months, and then TA actually introduced me to DiscoverOrg because DiscoverOrg was a TA business. A Cloud Guru was 6 months, and Red Canary was 6 months. So I think
You know the
there is
sweet
a
spot.
pattern here. You know what? Let me tell you. I will tell you. I credit one of my board members at Zoom Info for telling this to me. We were getting ready to go public. The business was approaching 400 million. I'd started when it was 30 million. It was an incredible ride, and I learned so much. And I also knew that one, I wasn't having as much fun at a big company. And two, I actually personally didn't feel like my skill set was as valuable at a big company. And she said, Katie, if you love the 30 to 300 million ride or whatever portion of that journey you love, go figure out how to just do it again and again, because it's actually the hardest stage of a company's growth. There's something like 0.001% of companies that hit 20 million even ever make it to 100 million.
Yeah.
She's like, so if you're good at that and you like it, just figure out how to make a career doing that. And so we were fortunate enough to sell these businesses, whether it was, MutualTech, whether it was ACG, whether it was Red Canary, to incredible businesses that at the time were much bigger than us. But for me, like, I knew that wasn't my place. And it wasn't because the businesses weren't great businesses, like a Zscaler, but it was just because I love the scale up stage. So shout out to her. She really helped me figure out my career path.
Yeah. Asad, the thing that I'll tell you, and this is true whether you just talk to Katie on call or meeting in person, it's very evident. Katie is very, very good at being direct in a way that's makes you feel at ease. I always you always feel like I don't feel like I wouldn't have to read her mind about anything. She just is really a calming voice.
Because I
What's
think I'm
that?
working on it right now. Like I feel like sometimes I think I'm being very kind and direct at the same time, but I think I can be a little bit, I don't know, condescending is the word my mother uses. And so, like, have you had to work on that? Because I think about this a lot these days.
Yes, but I also just got older too.
Didn't have
Uh,
time.
So I had an executive coach when I was kind of at that VP level back at MetroTech, and she really helped me on this because I think I always felt like I had to be the person in the room who had the answers. And she changed this mindset, which was, no, I needed to be the person in the room that had the right questions, had the best questions. And as I got older, I realized how valuable that was, more and more. And I also made so many mistakes and had so many lessons learned through the years of going through this, although, I'd like to think it was more ups than downs, but all those downs become a fact base of information that when I'm talking to AJ or when I'm talking to Brian or when I'm talking to anybody that I'm working with, and I see that they're going through the same thing, I can say, oh my gosh, I was there and here's how I screwed it up. And my job is to help you see around the corner. And while it's not 100% the same, there's enough pattern recognition that hopefully what I learned and what I didn't do well and what I did do well helps you do that better. So I think the ability to be direct, but in a way that is very self-aware of how I got to that perspective
That's interesting.
helps this feeling of being condescending or being patronizing, which I think can happen to all of us.
this is actually a really good segue to the main topic that we were going to discuss, which is I'm thinking a lot about operating in this age of AI. And there's this thing that's happening, which is you're seeing the org collapse to some extent. Not everywhere, but you're seeing these like pockets around the ecosystem where we have this one client who has converted product, design, and engineering into one role. And you're hearing versions of this in go-to-market. You're hearing versions of this in other sides of the business. We're still relatively early days, but you're seeing this org start to transform to be able to digest AI and get the best out of it, and everything is changing as a result. Your background's interesting because you have run product and engineering and go-to-market. And usually when you see companies that hire presidents, it's to do one or the other. It's like the CEO is good at products, so you do go-to-market, or the other way around. So it's interesting when you've done both. There are not a lot of presidents who come out of go-to-market and have run product and engineering and run it well. In reflection, talk to us a little bit about that. Like when you first had to do it, how did you come to terms with it? And how did you notice that once you came to terms with it, it helped you even in the non-product areas? How did it make you better at go-to-market?
Yeah. So I think it would be useful if I explain my background in tech, because it explains how I got to this sort of interesting place. And then people talk a little about how I'm thinking about that with AI today. So I did not start in tech. So let me just start with that. I was an urban planning major in college. I started my job in government. I had great ambitions to be an amazing city manager. I didn't start in tech at all. I ended up really focusing more on real estate development, economic development, community development, and ended up being a project manager for a very large scale consulting firm that helped tech companies figure out where to put locations, like their next distribution center today would be their next data center, and helped communities figure out how to attract those tech companies that they wanted to them. So that was actually my introduction to tech. And I was like, this is an interesting industry. Everyone seems to want these companies. They're growing. Like, let me figure this out. Well, it ended up being that I got a job in a tech company here in Austin that had been very successful and then bought by a big public company. They were still running separately, so they had their own president, and he needed a chief of staff. That chief of staff's job was basically to make sure that his leadership team was like executing on the priorities of the business. He was kept up to date on what was happening. I was reporting up to our public company board what was happening. And so that was actually my first tech job. So I did not come up through a function. I didn't come up through sales. I didn't come up through marketing. I didn't come up through product. I started at the chief of staff level, and I loved it because I did not know what product management was. I did not know what, SEO was. I didn't know what anything in tech was, but I got to learn it all very fast. And more importantly, I got to see how all these functions had to work together.
Interesting.
So, I'll say that then when I came into more kind of growth equity staged businesses, I was fortunate enough to work with some great private equity firms that had amazing operating support for somebody like me who was young in this career, that said, hey, we want you to actually wear a lot of different hats.
Interesting.
And so I got to be the head of marketing for a while. I got to run recruiting for a while, all while being a chief of staff technically. But anytime there was an opening or, a gap, I kind of go in and fill it. I got to be run sales ops at one point. And in one of my first companies, we didn't have a product function. So we had a tech function. We obviously had developers. We didn't have a true product management function with road mapping. And so at the time, I was running marketing and the SDR team. And I said, I think we have this need, like, founder, you're driving the roadmap right now. That's okay when you're small. AJ has heard this story before. But we need to have a more rigorous process for deciding what is being prioritized, what trade-offs are we making. I think I can go do that because I had some background in strategy and stuff like that. So I raised my hand, and then I went and started a product management function. So I did come up I do have a unique background.
Interesting.
But I think the reason that I feel very lucky to have had that background is that I have literally sat in almost every functional leader's shoes. Almost. I was a budget manager early on, but I never sat in the CFO's shoes. But I maybe the only one I never sat in was like the true CTO seat, like truly the technical leader, and like the GC. But I sold to GCs, so I also understood them. So I understood what a product leader was trying to accomplish. I can understand what the sales leader is trying to accomplish. I can understand what the marketing leader is trying to accomplish. And my job was not to be the best at any of those functions. And I will say this like every day, I was not the best marketing leader. I was not the best product leader. I was not the best sales ops leader. But I was really great at getting those teams to work together and breaking down the obstacles when they were talking past each other.
That's
And
interesting.
that's my job.
So
That was my job.
there's this like classical tension between CRO and CFO, CRO and product.
Yeah.
They usually are talking past each other.
Yeah.
What have you found? And I find that everybody wants to try to see the world through the other person's perspective, but it's hard, right? Like you at best know their job academically, but you haven't sat in that seat. Where do you find that gap? So if you're talking to a CRO who's trying to like figure out how to work with the CRO, what do they miss that you were able to not miss because of your experience? And same thing on the product side.
So let me do maybe a CRO to CFO one first. So CROs, they understand the mission to hit the top line number, right? They understand that. They know that the CFO is like behind them to help them make sure that they hit that top line number. They don't always understand how to think about a full P&L. So beyond the top line number, how are you actually optimizing for gross margins, for operating margins, for cash, for the P&L? And so I think what helps often is, first of all, like find common ground on how they're building the bookings model. So when you can have the CFO and the CRO along actually with product and marketing, building the top line model together, you're strengthening the areas where you already kind of see eye to eye to speak the same language. And then what I always coach my CRO to do is, okay, that part is clear to you, but when you're sitting at the executive table, like I need you to now put on your enterprise hat. And your enterprise hat means you're having to think about the trade-offs to hit the bottom line. And so now your job is, okay, if you've got to hit that top line number, but this is your bottom line constraint, how would you be allocating your resources differently as a CRO to do that? And so I don't know if that's that might be rambling, but basically it's like really strengthen where you find great alignment. In marketing, people find great alignment around pipeline. So you can strengthen the sales and marketing team around like building a great pipeline model that they can lock arms on. Then the parts of it that they don't understand kind of become easier to then focus on next.
I can give an example of where, and Katie and I work together on something that like comes to mind when she's talking about this, like almost Venn diagram where they're two parts are coming together. So I mentioned earlier that advising on product, at the time, we had much more of a founder mode product organization. And this was 3 years ago at this point, but I was lamenting to Katie, it's just so difficult where I'm finding out about things on the product roadmap, like from a Loom video that was being presented to the engineering team. That just shouldn't be the case. And so taking a step back, Katie helped with, actually, interestingly, Meg, who's on my team, who was my chief of staff and has done a lot of those. Today she runs CS, but she's done all of those different things and was in product at the time, to take a step back and take a look at the process. Said, okay, let's just like go with a RACI model. It's pretty straightforward. It's pretty simple. Like AJ, what I'm hearing you say is that there's an accountability issue. You want more accountability to yourself and to the head of product at the time. Right. And so it really just like revitalized how we looked at product, and it's changed. And that was 3 years ago. We still run that exact process, product council, today. It's totally that entire product team flipped over to a team that we've up-leveled since then. But it was really starting at that moment in time to be able to see where product was siloed, standing off on its own, and it just wasn't doing the things that it needed to do to bring full alignment to the rest of the organization. And I was hearing it from all of my other leaders, but it just wasn't connecting the dots. So I think that was one area, just an example where I can just validate that, Katie, what you were just saying in terms of finding that top line, bottom line, where you like those numbers for the CFO and the CRO, that makes sense. But for other parts of the organization, where can you find that alignment and just make sure that you carry it forward, and just it's not just sort of set it and forget it situation. You really have to be intentional and focused and continue to follow up. So if you're looking for that alignment, you figure out where it is. And it's like, well, where do the baseline KPIs? What do we need to set? And like, where are we headed? And then just continue to communicate and talk about it as much as you possibly can.
Well, and also, I couldn't agree more, AJ. And I have a very negative reaction when I hear people say things like, well, is this product-led growth or go-to-market-led growth? Or this is our product strategy and this is our go-to-market strategy. And my view is especially, the types of companies that I'm working with, which are in this growth stage, like what every business needs to have is a very clear growth strategy. That growth strategy is going to then have like implications for the product roadmap. It's going to then have implications for your go-to-market strategy. It's going to have implications for your, acquisition targets. It's going to have implications for your channel strategy. And what happens when you don't have somebody who can actually see across that, you do end up with a product roadmap over here that's delivering really cool things, but maybe not the things that are needed to hit the top line number. You got a sales team over here that's like, we're going up market. We're, investing in great enterprise reps, but your product isn't delivering an enterprise ready product, And so that is where I always start with, whether I'm a board member or whether I'm, sitting alongside a founder as the operator. It's like, no, as a leadership team, what are the 3 or 4 things that are going to drive our growth in the next 2 years? And from that, we as a leadership team will build our operating plan, our product roadmap, our go-to-market strategy, our investment and resource allocation strategy. And then we'll keep checking in on it. Like, well, it's nimble, it can be adjusted. Well, in these days, like you got to adjust it. It feels like it goes even faster. But without somebody who can connect those dots, you absolutely end up with these like siloed functions.
It's so funny you say this, because this is exactly where we were. We were like, oh, PLG came out, and we're like, we're going to be PLG. And so you have this PLG, and then exactly that, where you're like, well, we need to move up market because of ACVs. And so we had the exact issue, which bringing it back today, and it's interesting. I'm curious. You mentioned the fastness. AI native companies are probably having the same thing, or companies that are changing to AI native. They're like, oh, we're now AI native. Well, that's not a growth strategy.
Yeah.
And so, like, tying it back to what you're seeing today in the boardroom as you advise companies, are you seeing a lot of CEOs? You're like, I know we need to be AI native, and you're just saying it out loud. It's like, well, that's not a strategy. How are you connecting those dots? And like, and so what are you hearing? Maybe that's off, but maybe it's true. And what are you advising the CEOs that are talking in that to that?
So it's interesting because I also lived through the on-prem to cloud shift. And there are some similarities. There's some differences. The speed is definitely different. I absolutely hear that. So let me just start by saying I absolutely hear that. Like, we need to have an AI strategy. Investors are saying, what's your AI strategy? How much AI ARR do you have? Which, by the way, at some point will be very, very important to company value. How much do you have? And they're focusing, too many companies, I would say, are focusing on the technology and not on the customer value. So if you think back 20 years ago, if everyone was just like, we just need to build in the cloud, but it wasn't grounded in, we're building in the cloud to drive X ROI for our customers, X value for our customers, to meet this particular problem that they have, or even internally, right? So that our internal teams can do X, Y, Z. Then there were a lot of cool products that got built, but like customers don't necessarily pay for them, or they don't value for them. So it's the same thing I feel like in AI, and that's a lot of what my job often as the independent is where an investor is saying, like, what's your AI strategy? And the team is coming in and saying, here's all the things we're going to do with AI. Then my job is to say, all of that is important. You need to have an AI strategy. You need to have AI ARR. You need to be doing internally like optimizing your business for AI. But why are you doing it? What is the customer getting from it? Because all of us, we've all been through, whether it's a phone or anything, like there are new technologies that help us do things better, but they're still the same things that we always needed to do. We still need to communicate with people. We still need to get in touch with people. So what I worry about sometimes is that, we're sort of swinging the pendulum to tech for tech's sake versus tech for customer value sake. And I think it will swing back, but that is what I spent a lot of my time thinking about and talking to the companies about.
I think this is really spot on because right now there's this whole pricing conversation that's happening. And everyone, it's so interesting because it feels like so backward to start with pricing. And it's like moving from seat-based pricing to consumption pricing is super risky because in consumption pricing, they've got to consume the thing. So what if like you switch and you find out like they're not consuming, you're screwed, right? Like that's the sort of stuff that gets CEOs fired and a bunch of people lose their jobs when they get that decision right. So you can't start there. You can't start with like, we got to change our pricing to be relevant in this time. You have to start with how do we provide immense value? And then downstream of that is, even in the 4 Ps, pricing comes much later. It doesn't start like pricing product. It's like product, then data packaging and pricing. And we're just like, I hear a lot of people talking about it the other way around. I think Manny, the old CEO of Outreach, he's got a company on pricing. And this is his thing is like pricing. Everybody has to change their pricing. It's like eventually, but I don't know if that's where you should at all be starting. Sounds like a very silly way to go about things.
I do not have a fully formed opinion on the pricing piece yet. We were talking about this last week. But what I do have a strong opinion on is what companies are trying to solve right now is this valuation problem that it is how much of your revenue comes from AI.
Yeah.
And so if you think back again, 20 years ago, it was a lot of how much of your revenue is coming from SaaS or the cloud versus your on-prem. And that was a big thing and it mattered. It absolutely mattered. Now, right in the last 10 years, very few companies even think about that because everything is SaaS revenue. Everything is cloud-based revenue. So I think at some point, to your point, it will, right now, what everyone's trying to figure out is how do we attach a value to the AI that we're spending and then capture that back. Yeah. At some point, it will just be this is how we price for the value we are delivering. And I also think that for years, whether it was AI or something else, everyone has wanted outcome-based pricing. Like I can remember when I first joined my first tech company, and one of the frameworks that we put in place was like ROI-based pricing. Like the dream was to be able to price based on ROI, and we never could do it. Like we had better ROI models because of it, and we could pitch better and we could demo better. We can never actually change our pricing to it. Now, maybe we will at some point, but this notion is not a new notion. I think now people are just saying, maybe now there's a better way.
Maybe now we can actually
bring
do
this
that thing.
to fruition. Yeah.
But I'm skeptical that anyone's actually doing this yet. No one, I mean, Finn was probably the most forward with it.
What's your consumption pricing? I process your payroll, pay me like.
No. So actually, it's really interesting. What Katie said is like, at the end of the day, the customer doesn't really care if you have AI embedded. They just want the outcome and they want the thing. So for QuotaPath, we launched Atlas, and now we have ARR revenue. Yay! In June.
Are you thinking that once I hit $1 million in AI revenue, and if I hit it really quickly, then the valuation of my $1 million in AI revenue is blah blah blah?
No, I haven't really thought about it that way.
They're like, hey,
my head
$5 million of this, it's valued at 100x, and then I have like my SaaS revenue, and that's like valued at 3x. But
the context for our product is, if you think of it as standalone in terms of has all of the QuotaPath data, customer data on earnings and benchmarking data, is able to tell you exactly what the design of the plan needs to look like. Actually, this ties it back to something Katie and I talked about probably 2.5 years ago, where in August, companies go through all of their planning for the next fiscal year. Like August to January, if you're at the CFO level, you're kind of shut down.
Or RevOps.
Or RevOps. Yeah, exactly right. Like, so those two areas are we are in the center, the epicenter of that. So
6
you know,
months of planning. That's
what's
great.
that?
6 months of planning.
I mean,
System like
yeah,
we're very bad at planning.
it's accelerating. I think that's the area where AI is absolutely accelerating this much faster. So comp plans should theoretically be delivered on time this coming year. We'll see about that. But
It won't be.
what we have found is that the customers are like, okay, I hate variable comp. I get it. It sucks. It's not so much fun. Can you take this off my plate? Sure. And what if we could do that and tell you the 5 things that you need to think about and change immediately for next year, and to put that in the lens of the CFO from the cost perspective, because that's what they care about.
But by telling me, can you charge me consumption pricing, or like, fine, you told me some shit, and like, how is?
Well, think about it from a performance driver versus a commission tracking tool. At a commission tracking tool, the value prop is time savings, which is like death for a software company. You don't want to be in time savings, but for a performance driver, it's like, okay, next year, look, my team capacity was.
But then you have to be like, here, do this shit, and that
Yeah.
shit has to work. Like, maybe
Yes,
like,
and then we get to charge the delta between the two.
run
Then
this
we
way.
can take a commission between the two.
Yeah.
So if
what if it goes
goal is
badly? Are you
85%,
gonna pay me? And like, you can't just have the upside. Then you have to own the downside of that. You know what I mean?
yeah, I don't know as a
If you
I will
came to
put a
me
pin
and you're
in.
like, I'm going to give you all these ideas, and when it works, I'm going to get a piece of the upside. I'll be like, yeah, but when it doesn't work, you need to like share my downside, and you would never.
Katie was about to say something there, because I'm curious.
I think that what's going to be really interesting is how ultimately we get to the predictability equation with this, because you have 2 things that are at odds with each other. I do believe, Asad, that actually businesses, as they are starting to generate AI ARR, I actually do believe that will be valued separately from
In a higher multiple or the same or lower?
My hypothesis is that for some period of time, I don't know how long it will last, it will be at a higher multiple. It will be at a higher multiple. However, that like outcome-based pricing model isn't as predictable as seat-based pricing. So part of the reason that SaaS businesses have always had relatively high multiples is the predictability of the revenue. Well, those 2 things are a little bit at odds with each other. So it's
And who doesn't like predictability?
Let me frame up your point.
CFOs.
I have an interesting point. I'm not sure if I'm right, but I've been thinking about this. I think that there are things we think were valuable about SaaS companies that turns out maybe that's not what the market thought was valuable. So we think like the recurring nature of the revenue and this tie into the
subscription agreements,
all these things that we're like, this is why it's like high switching costs, etc. This is what the model the analysts in the public markets are building has all these variables. And it might just have been that the thing they loved about them is they grow really fast. They hold on to revenue and they grow really fast. So they compound. And the one thing that history shows us is that growth has a higher premium than free cash flow. It trades at usually 3 times free cash flow. And then when the market's hot, it trades at like 5, 6, 7 times free cash flow like it does today. And so maybe that's all the value of a SaaS company was, that it holds on to revenue and it just grows really, really quickly. It's predictable, sure, but that's like a nice to have. I don't know if it really mattered to the public market, because it doesn't matter to them now.
I think that depends on the stage. I think early stage, that's correct. I don't think that's actually accurate later stage.
Interesting.
Where they aren't actually growing crazy fast, but
fair.
they're still valuable businesses because they have high retention rates. They've got, predictable revenue. But I would agree that under a certain size, that is true.
How much did the AI portion, because Red Canary is still relatively fresh last year, but it feels like today's market in valuing AI is different than just even a year ago. Was that a big part of the conversation in calculus for Zscaler?
I think it was so think of Red Canary more as a data business. Actually, more like you would think of a ZoomInfo or a DiscoverOrg back in the day, the biggest differentiator that Red Canary has was the way that we ingested data, normalized that data, and then we're actually able to build predictive models off of that data. Even before there were actually agents in the software, there was a unique way that we were leveraging the data to to be more accurate and to have more comprehensive analysis of the situation.
You just got to call it agents now.
So now there actually are agents now doing it. So this was, I would say, we signed the deal and we announced the deal at the end of May, closed it in August. So you can think about how much the world has changed in AI in that year since then. So I think it was less about how, the value of the AI agents inside the platform, but more the potential for the AI agents based on this unique data asset that we had.
This idea of predictability is the right one, though. I think that you have two sides to it, which is both so from a CFO perspective, predictability about your own revenue, but then as you're evaluating vendor contracts, you certainly are not going to just say, well, how do I have predictability around all of my vendors that are now consumption based? I'm okay with
I'm trying to imagine the CFO, the budgeting process.
Yeah.
You've seen it now, so I think the first thing is it just probably leaves a lot less room to hide, right? If you're a public company, you could hide a bit more because of ServiceNow, where it has 0% churn. There's certain things 0% churn will hide that Snowflake can't hide. Snowflake will oscillate a lot more. And maybe that's actually net positive because it pushes you towards customer value a lot more, right? Consumption-based pricing companies, I think, who primarily price like that are probably going to be more customer obsessed than seat-based pricing companies because of the nature of that fact.
Absolutely.
You can only offer predictability if you can master continuously improving the value you provide.
Which gets back to, I think, what at the end of the day is the most important thing here. And, which we said earlier, which is the companies that are embedding AI for the sake of AI and not because it is the thing that will drive the customer value, those aren't gonna matter. But the ones who are doing it, the ones who can quantify the ROI, which I think is still early for most people to do, I do think it will be a better product. It will be the difference between a rotary phone and our cell phone and how it gets priced and what it looks like and the technology behind it. At some point, no one will even think about it.
Yeah.
Because you're getting so much value from it. We're just it's really weird in between. And I do think there will be some companies who will lean too much to tech for tech's sake.
Yeah.
And not AI for customer outcomes.
I can tell you as a buyer, because I run a services business, so I'm a buyer of technology, but I'm not a technology business. I'm not necessarily qualifying for AI in the stuff I'm buying because I'm just assuming everyone has it. And it'll show up in our diligence of the things we're buying that this shit looks really old and clunky.
Yeah.
But most of the time, the assumption is if you're out there solving a problem we're trying to solve, you have the AI involved in it. Whereas a year or year and a half ago, I think it would be a much more prominent part of this purchasing scorecard that we would put together and then go into market. AJ, do you think a lot about this AI revenue these days? As a CEO of a company at your stage, how much thought are you giving to overall revenue but segmented between AI and non-AI?
The growth, what type of growth are you, what type of growth are you striving for? That the point Katie made earlier was the really important one, which is at the top level, I look at our growth. So we have quota path core, which we've had. It's just okay, we solve the commission problem or challenge. And that has taken years to really figure out in terms of all of the nuanced different Snowflake pieces of it. And then you have Atlas, which is the AI piece to it that we're embedding and putting out throughout the application and the app, whether that's a reporting or just anomaly detection on your earnings, whatever the case may be. But the real growth engine that I look at is more in services and AI tech enabled services. For us next year, we have more and more customers that are just asking to take a lot of this off their plate, whether that's a cost control or a headcount reduction,
And how are
or
you
it's
thinking about that revenue's quality in terms of valuation of?
yeah, the margins have to. So I talked to, I think, Liz Christo, which all of us know. She introduced me to 5 or 6 heads of services, including at NetSuite and some other organizations, and how they think about the quality of the revenue today. The opportunity that we have is, one, we're a product company that is doing the big no from 10 years ago, which is like, don't ever become services, don't go into services.
Yeah, but
But today
everyone.
But
I'm
that was
confident
because it
that
was it was a
that
different
was the
market.
margins. I'm confident that's the right move
Yeah.
today. And our ignorance is a positive in this case. I've never built a services revenue before, and I don't think I would hire a GM from a previous era, or at least one that wasn't thinking about it in the right way, to go do this. So I've looked at the quality of the revenue of, like, I heard it all over the map. I just used the data points. Typically they said above 50%, but I think that the real number there is actually above 70% margin. And
I
what
just
that ultimately means is that you have to have, so you're switching from customers to clients, you have to have CSMs that can manage and handle a book of business that support almost SaaS error type of book. That's probably 25 to 30 clients and the ACVs there. And then you have to have, so we actually have one of our engineers working in the go-to-market team to ultimately take a lot of the process for every individual client and automate them in the services. We only have 2 current clients that are our design partners, but we haven't even launched it. They came to us, and we won't launch this offering until the fall. And this is not part of our revenue plan. In fact, Atlas and our AI was not part of the 2026 revenue plan. It will be part of 2027. So it's upside today. It's experimentation. It gives us the opportunity to say, like, okay, we're still going to hit growth plan. We might accelerate a little bit on the cost in some areas, but if we do launch services, it has to be profitable from day one. And that's how we'll look at the revenue model, so that in 2027, Quarterback has been growing 50 to 60% year over year the last several years. To continue to do that next year, we're going to have to transfer a lot of our revenue over to the services / AI. Oh, go ahead. Katie has a question here too, I think.
Yeah. Okay. AJ, you said something that I am finding to be the most interesting part, actually, of the AI questions right now, which is the profile of the people you are hiring.
Yes.
So I'm actually curious. Are you looking for, like, let's take this CS team example that you use. Like, are you looking for different things in the profile of roles that you have had forever?
Yeah, we are. And it's really in technical ability. And so it doesn't necessarily, I'm not saying that that's the one-to-one equate to someone
in the
that, like, is
services
AI
thing?
proficient. What's that?
In the services thing that you're doing.
Yeah. Well, also just, I think more generally, our profiles are changing across the board to this area where, okay, you know SQL, but you don't have to like write in SQL ever. It's the same with our engineers. Our engineers aren't writing code at all. And in fact, 90%, I think, of our code is coming from either Cursor or Claude today. And that's the same thing that we're thinking about for hires today, is that they're able to, not behind the scenes, because they still have to be customer facing. That's really, really important for sure. But that they're able to technically and curious, they're very curious about it, because we've always hired from curious standpoints, and startups typically do, but curious about how that they can handle it. And then there's this flip, and Katie, I'm interested in the companies that you're on the boards of or advising. There's this kind of like duality between centralizing AI ops versus letting individuals run with it. And we've interviewed folks on this where they're like, oh, give them the framework and then let them run. And it's this back and forth. I think for startups, at least for us, we have a centralized part. I'm pushing the management team more to just I'm as hands-on keyboard as I can be, so that we can tell AI wins, successful wins, and continue down that path, versus like putting a, like, here's what you need to do, here's how to use Cowork, here's the 5 things you can do with Cowork. What are you seeing, Katie?
We're seeing a little bit of both. So I will say that most of where I spend my time from a hiring perspective is at the exec level, and I'll talk a little bit about what I'm seeing different there. But in terms of the like, how are we structuring AI organizationally? So I sit on 4 boards and I do advising for 2 or 3 others, and all different investors, all great growth equity, but all different investors. So it's been interesting because there's a lot of different models. I think the companies that are doing it the best are empowering each individual department and each individual team to be experimentative and be innovative and like come up with new ways of working and then highlighting that throughout the organization. But then they're centralizing effectively the mechanisms for ensuring that everyone is doing something, and that as an organization it is getting reflected up and being celebrated, and the successes are, are shown. And then usually there are 2 or 3 areas where at an executive team level, you may have decided this is where we know we have an opportunity to optimize. And that central resource is sort of acting like a project manager to make sure that those things are happening. So it's both top down and bottoms up, but with a leadership team that's being very deliberative of like demystifying AI and saying like, embrace it. We're gonna, we're going to celebrate it, and we want to hear what you're doing.
You called it, Katie, I think you called out probably one of the hardest things that's happening right now, or is not talked about a lot right now, which is executive hiring. And so for you and for Asad on this, and you asked what have we changed at the CSM for the individual level? What are you seeing changing at the executive level in today's world?
Yeah, so this has been, I feel really fortunate that I have this moment in my career where I'm getting to just relearn again because I'm not day-to-day operating. And I work with a lot of, I work with different size companies. I work with just different investment firms. So I'm using this to just like soak it all up. But in all of these cases, there is some level of executive hiring that is going on. And it's a variety of different roles. And what's really interesting is if you think about, most, let's say, growth equity investors or private equity investors, they playbook is not the right word because it's not a playbook, but they have such great pattern recognition historically on what great executives look like, what a great CRO looks like for a $50 million business, what a great CFO looks like for a $50 million business, what a great CEO looks like for a $50 million businesses. And I would say like 70% of that is out the window. And they are going, meaning the investors are like having to recalibrate and refigure out what the right profile is. And the recruiters are having to recalibrate and figure out what the right profile is. And there's definitely like, there would be a resume. I'll use myself, resume, great track record, like consistent 30 to 300, check, check, check. If I'm a $30 million business, I want Katie to come work. Well, now they're not going to be so sure because is Katie too set in her ways? Does Katie have too much pattern recognition from years of doing this? What we're really focusing on now is like how curious, where is the level of intellectual curiosity? Are they as comfortable building as they are like optimizing and maintaining? Like the classic operator of $100 million business actually will not be particularly successful in a $100 million business today that is redefining itself.
Are you finding that you are seeing that some people are able to shed their old skin? Because I think about this as in terms, you can,
but not everybody.
It's very rare, like, because these habits are not bad habits, right? Like, I smoke, and I know it's a bad habit, so I have this like built-in motivation to quit it. But then there are the things that have made me a lot of money in my life, and those are ways that I do certain things.
Yeah.
And those are habits that get entrenched. You see this with salespeople, you see this with leaders, like the things that have worked for them because of which they've bought a nice house and drive a nice car, etc. And so now you got to like shed all of that. And I find that those habits are the hardest habits to break. And I'm finding that 8 out of 10 are having a real tough time shedding that.
I was wondering where you were going with that. I wasn't sure if you were saying that you're going to vape. You vape when you close all your big deals. You're like, I smoke, so I'm vaping all the time when I'm closing.
Because it's a very bad habit.
Bad habit. I think you're right. I think what you're seeing is there's a couple of different camps of people who on paper might look exactly the same. And by the way, this is for any role. This is the CRO, the CEO, the CFO, any role. There are the ones who have said, this is going to be exhausting, like having to learn something new again. I feel really proud of what I accomplished in my career. And like, I am happy to let the next generation take that on. And I'm going to watch it, from the sidelines. You have another group who maybe actually the last few years has been like a real drain on, because as we talked about, like 23, 24, they were not fun for anybody in any company. And even the best CEOs were like, it was a slog, right? And so I'd say there was probably some who maybe last year were starting to think like, do I want to do this again? Well, now this has like re-energized them. And they're going, wait, this is a brand new thing to learn. Like, I see some great upside here. How exciting would this be? What pieces am I going to take from what I, have learned, and what am I going to, what new things am I going to bring to it? And you can feel that level of energy when you're talking to people. You can feel the difference in those two levels of energy, but we're testing more for the learning velocity, how they're thinking about approaching like new ways of doing it, versus tell me how you were successful here, 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 and here, because it's just not at the same premium. And I do think that this builder versus manager is also really interesting. Like, there have been a lot of very successful operators who have come in and they have been exceptional at optimizing things that are already in place. And now it's kind of like you're at a startup, even in a big company.
You know what the strange thing of all of this is? In this is this assumption that AI is ready for prime time across all orgs. And I think a lot of this is driven because these are technology companies and AI's best use case is code. And there's like this almost assumption in our ecosystem that because it's working so well in code, equal opportunities lie everywhere else, which is just not the case, right? Like, if you take the best model and you give it a reasonable amount of compute against any one step that it has to do, it has 95% accuracy. If you do a 20-step process, that same model achieves 37% accuracy. So then people are like, no, I'm going to break this into smaller pieces, and agents are going to do the small piece. And then there'll be a verification agent on top of it. And so I'll only have 5% inaccuracy across 20 steps, but math would say that it compounds and you still land up in a shitty place. And so then they say, yes, but there are all these benchmarks that show that, yes, you can achieve high accuracy. But what they miss is that's when you give it so much compute that the cost of giving that task to AI makes it non-palatable, meaning that something that a human does for $200 for one task becomes $30,000 for that task. So you can't do it. And so I find that there are a lot of people that are coming into orgs right now that are trying to AI forward that thing because that's how they stay relevant, is to be the AI leader. But there aren't those advantages that easily available. And these two things are hitting against each other, and we're not getting much results, and people are feeling more frantic. It's a very strange situation.
It is. I do think that where across the board I see AI really accelerate outside of product and engineering. I mean, there are truly like examples of being able to go from ideation to branding product to market in 90 days.
Amazing. Magic.
Before, which are incredible. But when you let's take the example of a growth strategy development or the RevOps planning cycle, what I do see is incredible compression of the amount of prep time that it was taking to get to like an answer, or especially when it's not a yes or no answer. It's a series of scenarios that you're trying to work through and decide. So the amount of time that folks are having to spend to get to the fact base to then still have those sorts of scenario planning is being compressed significantly. What's great about that is you're not asking AI to give you a right or wrong answer in those situations.
Do you worry about the inaccuracy during planning? There's one company I know that basically their growth model that they then went and like committed to the market had this really flawed like calculation in it, and no one caught it. And this ended up being a board number, and everybody went after it, and everybody had to commit to it, and then everybody met and so it was obviously.
I would worry. So I worry about it in a couple of ways. I worry about it if you're relying on it solely to give you the answer without the human review. Just the same as, you could have a wonderful FP&A analyst build an Excel model, and there's one mistake in that Excel model, and then your entire kind of bookings model. You still have to have somebody double checking and going through it and looking at it with a fine-tooth comb. So I don't know if it's more likely than it would be with a human, but what it does is you can't say, now I don't need the human at all in the loop.
I think the human is telling AI to check it 5 different ways and is then taking it from Claude and putting it in ChatGPT and saying, ChatGPT, you check it. Oh, this is great. But I don't know if in a model with 500 formulas in the end that AI built for us, a human is going and double clicking every field and being like, that formula feels right. That formula, I don't think that's happening. I think they just.
I will say, as somebody who used to be a budget manager and whose job was making these insane Excel models, I did have to go in and do all of that at some point. So I think you're right. Like if we think we do not have to do that anymore, there is a real problem.
I think that's where we are.
Yeah.
I think there are a lot of companies and people that are definitely in that bucket.
For sure.
I think
for sure.
Genuinely I talk to so many people. They think double checking the work means telling AI to double check.
Yeah. No. I think what I think is amazing that most companies are getting right now is the ability to, and this actually goes back to where we actually started the conversation around like being able to look across the business and like seeing, the full customer feedback loop, seeing the full kind of across sales, marketing, product. It does an amazing job of being able to assimilate so many points of feedback from so many different stakeholders, both internal and external, that would have taken multiple people months to do before. And in most companies, especially smaller companies, like you just didn't have the time or the resources to do that. So then you would make wrong decisions and wrong assumptions. It cannot be used for is then making the decisions based on that fact base. Like it even puts a premium even more on humans with great judgment, with humans who can think about the trade-offs based on now, a more objective, accurate fact base in front of them.
Yeah. It's wild how fast this has all changed, because 3 months ago, we would not actually even probably be having this part of the conversation, maybe 6 months ago. And now it's just like, we just have to stay up to date and on top of it. Asad, we are coming up on time, but we also, do you have a Bears versus Bulls? We didn't get a quiz pro quo today.
I was a little stretched, so we missed a segment that we usually do called Quiz Pro Quo. When you come back, we'll do it. It's a quiz where you actually have to ask quiz questions and you get challenged with questions.
Crush Asad.
But we do have a final segment. It's Bulls versus Bears.
Bulls versus Bears.
And this is basically, you don't want to say whether you're bullish or bearish about something and why. I'll start by asking AJ a question, and then you can end it for us. AJ, are you bullish or bearish that the maximum value that AI can provide today is $200 a week worth of tokens based on Tesla?
Question is this. Let me pull out my calculator.
So Tesla set this limit. You have Claude. People are allowed to use tokens as much as they want, right? So do you think the upper limit of value is $200 a week? Or have you not yet?
This is per person?
Yeah.
Right? Per week?
Per week.
Okay. Let me just do I guess we just do the math on it. So you're okay. Let's just round up and make this simple to $1,000 a month per head.
10,000 a year.
10,000 a year per head count.
With
our tools. So you're essentially adding like 5 to 10%. That's the maximum, you think? You're saying, so your question is, am I bullish?
That's the limit. Tesla said you can't spend more than that.
I am bearish. Super. I mean, you could spend whatever the company. It's a supply demand the situation here. If
But if
you
you're in East in token maths their way through to $1 million a month, but like you have to decide what's the reasonable level that I'm going to tell them more than this is too much. We don't have an ROI more than this.
Yeah, I think it's pretty straightforward. You look at the growth and the costs, and you kind of just line it up and say, okay, we're growing 1,000% year over year. You can't spend any more on tokens because if we hit that $200 maximum, no. So I'm
Do you have
bearish
a
on that.
limit right now? Well, how much can your engineers spend before you get a notification saying something? That
I get the
somebody
leaderboard every single week, so I know where everyone stands on
from the tokens
spend.
perspective?
Yeah, we as an organization, we've upped it. Obviously, we're just under $1 million a year spend
Holy
right now.
shit! You guys are spending $1 million a year on.
It
Wow.
went from I think we were 500,000 a quarter ago, and we just upped it. I'm not saying that's the maximum. I'm not saying that's what we're going to spend. That's the maximum
That's
in terms of
massive.
our
How
budgetary.
many engineers do you have?
25. But it's
Okay.
everyone using AI.
Then divided by 25. I'm bad at math.
But it's not just the engineers, right?
It's not just it's the whole company.
Yeah.
We have 75 people in the org. So just to call it 100 people in the org, it's I mean, yeah, I guess it's $10,000 a year. It's exactly what you just said. Literally what you just said. So
You
get
said
it.
the same limit as Mars. About this level.
I hope you give Katie like
And now, and that's why you need to be able to calculate your AI revenue
yes,
to be able
exactly.
to actually decide that question.
So when in the board meeting next week, when I get that question, Katie, I'll have an answer to it ready to go.
I have a question for you, AJ. Next year, 2027, do you think you will spend more on AI or make more with your AI product?
Make more with our AI product.
Do you think you will? Oh,
have to do that. Yes, for 100% sure. Not even close. I think we will make. I think we will make 6 to 10x on our. And I'm counting services here on what we spend.
AI. So this is your
And
lab
that's why the
the
push on AI revenue.
Yeah, there we go.
Service
That's
revenue
really
does
good.
not count as AI revenue, by the way.
Of course it does.
As an
AI
investment in
enabled?
Protocol, I do not count that. I do not lump that into the same thing.
And a year from now, we'll be having this conversation. You'll be like, "You were right, AJ. It should have counted."
How? It's humans providing a service, doing the work. Like, how is this AI?
It doesn't matter. It's not though. It is AI
agents.
under the hood.
Yeah.
God,
Human
God,
agents doing the
yes.
work. Like, how is that AI?
You've taken this question too far to down the.
Can I get like a bullish or bearish on like USA versus Belgium or something question?
Yes, please. Yes, thank you. Give her a World Cup question, which Austin knows nothing about. So
AJ, you could ask the bullish versus bearish. How about
well,
you?
actually, I will. I actually okay. This is a fun question. Now this is coming out on Sunday, so I'm gonna pick a random team and see if you're in agreement because the team won't have won yet. Are you bullish or bearish on France winning the World Cup this year?
Most ridiculous team they've got.
I mean, they've definitely been the most consistent of all the teams.
Yeah.
I'm pretty bullish on it, but I like to root for the underdog. So I wouldn't want to be asked to put money on France because I'd still in my heart want to root for the underdog. There's not that many left anymore.
The US
I don't know.
the US is definitely an underdog.
I kind of want to root for Norway, but I'm going to guess that France will win.
I'm with you on the Norway. Norway is such a great story and such likable players. Right now, there aren't a lot of people in the world outside of US that are rooting for US tonight. So
I'm obviously rooting for the US tonight. Let me tell you my soccer game story tonight because this dinner will have already happened. So I've got an all-day working session with a company that I sit on the board of tomorrow. We booked our dinner tonight. AJ at ATX Casina, which I'm sure you know.
Yes.
We have like a
That's
private
where
dining
all
room.
of our board meetings happened at Trenkite also, by the way.
Okay.
Every single one.
So this team is coming in, they're going to melt, but it's okay. The dinner starts at 7. The game starts at 7. Ooh. I get a frantic from the investor today that's like, no, we need to move this. We've got to watch the game. My husband and I are literally loading up one of our TVs into our car to drive it over. The restaurant will put a table up for us. I got to get there early to get it all set up.
Best board dinner ever. Best board dinner ever.
And so we are going to eat queso as a board team and watch the game.
That's a cool board member.
Hopefully it goes well, because I think it bodes for how our session tomorrow goes.
Is it board meetings tomorrow? Yeah. Okay. So we always ran our board dinners, which is weird now that I think about it after, because every other board seems to do it before. So yeah, I don't know why.
You must have had.
Always do it before.
I silently just sitting there, tense.
Yeah,
well, got fired, doesn't know yet.
That is awesome, and I could definitely see A+ to you and your husband for getting that done. So, okay, with that, Katie, we are at the end. We flew through some topics. Also, I'm going to tell one fun story though at the end of this, and Asad doesn't know this story. Katie and I were introduced back in probably 2016, 2017, I want to say. I don't remember who did
right when I was joining DiscoverOrg, probably. Right about then. Yeah.
Yes. And you were in Austin, obviously still in Austin. I was in Austin. And
I actually went to Portland in 2016, so that's why I don't know.
Yeah, maybe, but I was definitely still at Trendkite for sure. Well, anyway, I get a message from Katie, like, I think it went to probably my email, my work email, like, hey, are you still joining this coffee meeting that we set up? And I was like, oh my gosh, it went to my Gmail calendar account. And so I totally just no showed Katie, stood her up in our first coffee meeting. And somehow, some way, the world's parted and we were able to still meet up. And the rest is history. Thank goodness for that. Thank goodness you just didn't.
I went to that same coffee shop this morning and had coffee and just thought about that time that you stood me up.
Was it Houndstooth? Was it
Houndstooth?
On 6th or
on Lamar? It was the one up north.
Well, one up north, which we have had coffee there since. So I'll take that. Yeah.
This was fun. Thanks, guys.
Thanks, Katie. Thanks for having us. And with that, we are done with our episode. Thank you all and appreciate it. Give us, this is for Sam. Give us 5 stars, like us where you can, all YouTube channels. Thanks, everyone.
Give 5 stars, keep it to yourself. We don't like feedback.
We don't. All right, bye.